Hello everyone and welcome to our yet another discussion on auditing. We are beginning a new unit which is audit evidence, and in this lecture we are going to discuss audit evidence, meaning and scope of audit evidence. Of course, the slide for this lecture segment is available on your student account. Just download. The notes are also available, so make sure you have these as you follow through the lecture. Audit evidence is all that information that you have used as the auditor to arrive at the conclusions on which your opinion is based. Okay? All the information you have used in arriving at the conclusions on which your evidence is based. Audit evidence includes information that is contained in the accounting records underlying the financial statements and other information gathered by auditors. You know, what we are saying is, when you're doing the independent examination as the auditor, you are examining financial statements. And who prepares the financial statements? It's the directors. So your opinion is based on what you have discovered in the financial statements, including any information you have gathered as the auditor from confirmations that are given to you by third parties, like the bank. Okay? So, if you're saying you have 1 billion on the account, I can confirm that. If you cannot support it as the organization, the uncertainty we are talking about, I can confirm from the bank. So the bank is the third party and is confirming either the loan, it could be a loan you got from the bank, it could be a bank balance. They're confirming that. Now, I've always told you that don't be auditors who want to look at everything. Auditors look at a few, they sample. Auditors sample. Okay? They sample, and the sample is enough. Of course, you have to do sufficient sampling. The statements you're sampling, you're looking at, they must be enough. So you sample those ones and conduct your audit tests. You're not expected to look at all the information that might exist in the organization. You're not going to finish, because in most cases you have like 2 weeks to do the audit. And in the 2 weeks you must look at information that has been gathered for the entire year. You want to base your opinion. You want to do independent examination. So you cannot look at everything. You have to do a sample. Do confirmations. So we are saying, as you're placing that opinion, you must have enough evidence. Now, it is relative. Something that might be enough to you might not be enough to me. So what would be sufficient when it comes to audit evidence on which we are basing our opinion? We are saying that the appropriateness of audit evidence is the measure of quality. So, quality is linked with the appropriateness of the audit evidence. And that's going to speak to relevance and reliability. That's going to speak to relevance and reliability. So, what you have, is it of high quality to support your conclusions, to support your opinion? Is it even relevant? Is it reliable? Can we rely on your evidence? Then, sufficiency of audit evidence measures the quantity, because there is quality and quantity. I could be having one piece of paper and is of high quality. It has high quality information. And then for you have sacks and sacks of documents and they are low quality. So that will also depend. Sufficiency of audit evidence is the measure of the quantity of the audit evidence. The quantity of audit evidence required is affected by the auditor's assessment of the risks of material misstatement and also by the quality of such audit evidence. Material misstatements, what do we mean by this? Errors that are within the financial statements, because as the auditor, you do independent examination of financial statements. Now, if you suspect there are errors that are material in nature, you need to have enough evidence. Large volume when it comes to quantity of evidence. And that's speaking to your risk assessment, because you've assessed that the risk is very high. So if risk is high, audit evidence must be large volume in terms of quantity. And better still, it must be high quality audit evidence. So we continue on the third bullet by saying that the standard on auditing 500, which handles audit evidence, requires auditors to design and perform audit procedures that are appropriate in circumstances for the purposes of obtaining sufficient appropriate audit evidence. The way you design and perform your audit should be in such a way that you are in position to collect enough sufficient appropriate audit evidence, not to come out empty-handed after the audit because you had a bad design, because you performed your audit poorly. Therefore, we are saying sufficiency and appropriateness are interrelated and apply to both tests of control and substantive procedures. Don't forget, sufficiency measures quantity. Appropriateness measures quality or reliability of that audit evidence. So if we say that the auditor arrived at this conclusion, at this opinion, we are convinced that there was enough, or it was the audit evidence presented by the auditor was sufficient. The audit evidence presented by the auditor was sufficient. It means that it was of enough quantity. The auditor collected enough to convince the shareholders on the conclusions drawn. Because we have said we have a bad report and a good report, qualified report, unqualified report. So if I give a bad report, I have enough evidence. Now, it could be enough but low quality. So when we say the audit evidence was sufficient and appropriate, it means it was of good quantity and high quality. Appropriateness measuring quality. Now we are going to dive into this a little bit more. Now I want you to go to the next lecture video that handles quality and quantity of audit evidence. Of course, this concludes our very first segment, or lecture number 1, where I have explained audit evidence.